Oh, what's up, everybody? Welcome back to Trading Wars. Thank you for joining me today. So, today we are looking at options recap number 11. We're going to be talking about the famous gap down and how to trade it. We're going to be talking about some of the trades that I took, talking about some of the trades that you took, and we're just going to be having a good time. All right. So, let's get into the YouTube right now. Let me just see how many people we have here. And what we need to do is we need to check the audio as we always do. So guys, let me know if the audio is good to go. And the next thing that we're going to do here, okay, audio seems fine. We're just going to hit the retweet button on our post. And we're just going to let everybody know that we are live now, okay? So there we go. We're going to go here. We're going to hit the retweet like that. And we're going to say live now, come for cookies, okay? So just try to entice people with cookies. See if that will bring them. I know I'm streaming a little bit late tonight, so it's 10 o'clock, but I wasn't going to stream because I was busy today and I had some events to go to, but I really wanted to talk about today because it's a very unique situation when we have a gap down like this. And I just really thought that it would add a lot of value if I talked about that today. So I really wanted to take the time, even though, it's late, to make sure that we can share the knowledge. All right, guys. So here we go. Mr. Yin Yang. I heard there's cookies. Definitely, brother. I'll be sending you those after the stream. Tyler's here for the cookies. Damarat is here from Phoenix. What kind of cookies? Anything you like. Anything you like. Late night adult session. Very true. Very true. Here for the cookies. Yep. We're all. Don't worry. Everybody's gonna be getting cookies tonight. Andrea's here from Houston. Welcome back, Andrea, to the stream. And let's get the party started. Okay, so let's go to SPY. And then we'll talk about a few of the trades. I mean, just looking at this chart, it doesn't get any better than that. I didn't play SPY today, but if any of you have my indicators, I mean, it's free. Anyways, so let's start off. And what we're going to do, right? The most important thing that I want to talk about is understanding how we close on the Friday. Okay, so let's just zoom in on here a little bit like this. There we go. We got Beast Mode 1384 with the $2. Thank you very much, brother. Welcome back to the stream. Like Christmas tree ones with sprinkles. I do too. So on Friday, we had something what we call a trend day. Okay, a trend day is pretty much when we continue to make lower lows all day long, or we continue to make higher highs all day long. So let me ask you guys a question. So how many trend days do you think happen in a month? Give me a percentage. What do you guys think? So let me share with you some of my back testing, some of my knowledge, some of my research, some of my studying, some of my struggling. Okay, so let me ask you guys right now. What's the percentage of trend days that happen in the market generally per month? What do you guys think? Give me a percentage. Okay. 20, 50, 10. What else? Fire it at me. Rapid fire. 30. Okay. One more. Give me one more. I see another 30, 420. That's right. 20, 15, 35, 31, 8. Okay, so here we go. So based on my back testing and some general knowledge that I have from trading the market for a long time, 20% of days each month will be a trend day. Okay. So we don't get trend days too often in the market. And the problem is most traders are playing for trend days. Do you agree with me? Most traders think that when they get into a position, it's going to go to the moon. Or if they're shorting a position, it's going to go to the abyss. Okay? So most traders are banking on the fact that they can get a trend day. But when you think about it and when you look at the numbers, it's only 20% of days each month are going to get a trend day. Okay? So, yeah. So brethren to all says once a week. Exactly. So about once a week, we'll have a trend day. Right? Sometimes more or less, but we're just talking about the average. Yeah, I just came up with the abyss term. I just came up with that. So let me ask you guys a question. How many of you, when you're taking option plays, are playing for the home run and playing for a trend day? How many? Be honest with me. Hit me with the 1 if every time you get into an option you think it's going to be a trend day, or hit me with a 2 if you don't think so. Okay, so hit me with a 1 if when you take the option plays you are expecting a trend day. So I see a lot of 1s. I see a lot of tears. See some 2s, some 1s. Okay. So now I'm just showing you the numbers. I'm just showing you the numbers. This is what it is on average. So if you get into a play and you're expecting it to become a trend day, you have to have the expectation that it probably won't happen as much as you want it to. So in that case, you have to be very smart when you play your option plays. And when you do see a trend day, you have to pay very close attention to it. And this is the whole point that why I start talking about this. So on Friday is a very important day because what happens at the end of Fridays? When Friday comes and we close at 4 p.m., traders become trapped. All traders become trapped. Every single trader becomes trapped on Friday at 4 p.m. because unless you close every single position you have, but all traders become trapped because they automatically expose themselves to overnight risk over the weekend. And with that risk, anything can happen. COVID news can happen. There could be a world war, and at the same time, positive things can happen, right? There could be, whatever. Tesla can acquire some company, whatever. Anything can happen. So the sentiment of the way we close on Friday is very important to understand how the market participants are feeling. So when we have a trend day on a Friday, we know that a lot of people had no confidence holding into the weekend. So we know a lot of people don't have confidence, and we also know that there's short sellers piling into the market. So from this point, we know we have probably at least a 50 to 60% chance that we're probably going to open lower than the close of Friday. And this is what we call a gap down. Okay. So when we gap down, we could see the actual selling started from Friday and it's a continuation until Monday. Okay. So now when we have a gap down, what can happen? Well, when we have a gap down, we can either have gap and crap, gap fill. Let's do this, gap and go. So let's do these 3. These are the only 3 things that can pretty much happen. Okay. So hold on, we got a donation here from Satinder Singh. So let's just grab the YouTube right here. We got Satinder Singh here. I think he's giving me a cup of, I don't know what that is. That might be wine. So thank you very much. Thank you for the wine, brother. I appreciate that. So basically what I'm saying here is that when the day starts, you have to prepare yourself for these 3 scenarios. And when you're taking trades, you have to understand any one of these 3 can happen. The one that I like to focus on is the gap fill. I like to focus on this a lot. From my analysis, 50 to 70% of the time, we will have a long leg to trade. Okay. So I'm not saying that it's just going to like completely go bullish and just like break through everything. But I'm saying there's going to be at least one leg that is going to give me a bounce. It might be a short-lived bounce. Like the bounce might go up and then come back down. Or the bounce might be completely to the gap fill and then turn around. Or the bounce might be just completely to the moon. And that's what happened on Chewy today. Okay. So when I talk about Chewy and the other ones, I'll show you what I did. I didn't trade SPY. Okay. But anyways, since we're on the chart, let's do a quick review of SPY. Okay, so we had a gap down. We had a gap down right here. So first question, who's trapped at the open? Who's trapped at the open when we gap down? This is a significant gap down, guys. We're not talking about a little bit down here or here. We're talking about a huge gap down. Okay, so with on SPY, it was, take it from the close, it was about let's say 1.4%, which is big for SPY. Okay, so bulls, obviously, right? So the bulls are trapped. The bulls are trapped right off the bat. Okay, so what you need to do is you need to determine which side do you want to play. You can't play every single side, especially when you're a new trader. You can't do it. You can play both sides if you're playing multiple different stocks, but on the same stock, it's going to be very difficult to play puts and calls at the same time unless you're an advanced trader. So what I recommend is we stick to one thesis. So here, we don't even have to use the thesis. We can read the price action from my free indicators. We can read the price action together. Okay. So here we go. First trading setup. I mean, it does not get any better than this. The Holy Grail comes. The heavens open up. The heavens open up here and Zeus throws the lightning down. Bam! Right there. See that? This is Zeus's lightning coming down from the heavens and it hits a bam. Highlights this Holy Grail pattern right here. It doesn't get better than that, guys. I mean, I gave this to you guys for free. I don't even understand. I don't understand what else to say. I don't. It's insane. Here's the Holy Grail. Okay. We take the short. All right. So what you can do, you want to be conservative, you put it over the bars. Okay. Put it over the high of the day. If you want to be aggressive, you can come in about halfway through the bar. If you held that, okay, so this is 4 times your money. At the very low, that's about 5.5 times your money. So what you want to do is you want to be just scaling out, right? You want to be scaling out. Like I taught you guys that already. We're not going to spend the whole lesson here talking about that. We can't be here for another hour tonight, guys. I have a lot of other stuff to do. So let's move along, okay? So that's the first trade. The second trade, what did I say? There's always going to be one bounceable leg. 70% of the time, there's going to be one bullish leg. And there it is right here. Here's your signal, inside bar. Okay, right there. There's your inside bar. Just taking this inside bar breakout, guys, that's 2 times your money right there, easily on that inside bar. Okay, so that's one play. That's second play. And then the last play is probably the most prettiest play. For those of you guys that have my book, somebody already mentioned it in the chat. Somebody DM me their profits today. It's the Fibonacci, the morning leg, guys. Let's go here. It doesn't get better than this. High to low. Pull it out. Look at this. This is why I need to be in the Hall of Fame right now. Look at this. Pull this out. Nobody talks about this because nobody put in the time like me. So here we go. And this right here, this is the Mona Lisa. It's very, very beautiful. We have the push down. This is the morning leg. You see how the morning leg completes around 10:15? So basically within the first hour, the morning leg completes. We pull back to the 618. We reject 1, 2, 3, 4, 5, 6 times. We reject actually 7, 8, 9. 9 rejections. And we roll over. And this is why I have the 0.169 extension. This is why I have the 0.169 extension on my chart. Because while everybody out there is drawing lines and cups and handles, spoon and forks, and J-Lo bottoms, I am testing these Fibonacci levels and creating them myself. 0.1, 0.169 are my custom that I created from being in the trials and tribulations of trading. And this is why I have it. Look at this level. 1 time, 2 time, 3 time, 4 time into the close. Absolutely just beautiful. We have the perfect Fibonacci. We have the push down, the pullback, trade to the extension, and then the reversal. It's just so beautiful. I didn't even look at the SPY chart today because I wasn't trading SPY. Okay, so hit me with a 1 if your mind is blown right now. Hit me with a 1. I have my wonton soup right now. I'm eating my dinner at my desk because we got to give you guys value. Okay, so I'm going to eat my wonton soup. So I'm going to say this right now. I'm going to say this honestly to you guys. The Fibonacci is absolutely beautiful. And if you don't have my book, I don't know why you don't. I really don't know. I'm just going to say that I'm going to say the truth today. If you don't have my book, I don't know why you don't. Because you get 1 month for free in my private swing trading room. That's $50. The book costs $88.60. So basically you're paying $30, whatever. $38. Honest to God, this is my 7 years of trials and tribulations in the market that I'm sharing with you guys right now. You don't understand, because the thing is, guys, I'm not a marketer. I'm not selling you some bullshit thing that I picked up on the street that I read in a textbook 10 years ago and I created. No, I'm selling to you my experience and my backtesting and my hours of struggling in this game and creating things on my own. I created the Holy Grail pattern on my own. Look at this. This is my creation coming to life. Look at this. I created the Holy Grail pattern on my own. I created the 618 morning leg. That's me. Then here, the 10% extension and the 0.169. I created that myself. Right? And I want to encourage you as a trader to create things on your own. Create things that fit your personality, your trading style. That's what I want to empower you to do. I don't want you to follow me blindly or follow anybody else blindly. Use what I'm doing as a guideline and make it better. Okay? So we got Matthew right here with the 420. Are volume charts ever relevant when using fibs? If you're using Fibonacci on the index, like the SPY, for me, volume is irrelevant. It doesn't matter because it's the index. The index, from a day trading perspective, will always have high volume. Okay? And some people are, oh, summer volume, blah, blah, blah. It doesn't matter. There's always volume in the morning when you're trading the index. There's always volume, always traders. So it doesn't matter. But when you're trading other stocks, then volume becomes important because sometimes those stocks are illiquid or they don't move. So you need to watch volume then. Okay? All right, so let's move on. So are you okay with this analysis here on SPY? Hit me with a 2 if you're good. Hit me with a 2 if you're all good here. Okay, see the 2s. Get some of this wonton soup. Hit me with a 1 if you like wonton soup. That's actually the more important question. Hit me with a 1 if you like wonton soup. I see a mix here. That's the most important question. So now we're going to get into the nuts and bolts of everything today. And we're going to talk about Chewy. And let's discuss. So as I pointed out on Twitter, I'm in phase 2 of my robot. Phase 1 was testing the breakouts and making sure that the bot can understand the breakouts and can trade it well. And the second thing is the reversal trading. So I actually started implementing some reversal trading with the bot this week. And Chewy was an example of reversal trading. And then there was another opportunity, right? So let's discuss Chewy today. I mean, Chewy is absolutely insane. I mean, it's just insane. And honestly, the credit goes to Theta Warrior for this stock because I don't really watch it. But yesterday when it showed up on my scanner and I just said, you know what? You know, Theta Warrior, he looks at this stock a lot. So let me give it a shot and see if I can make some money. And I did. So, you know, shout out to him for bringing this stock to my attention. And then I used my style to execute the trade. And that's what the trading community should be about, is basically sharing ideas with each other. But you have to bring your own style to the trades, right? Everybody's style is different. So we're going to go to the daily chart first. Okay. So I was watching Chewy very closely. We're going to go to the weekly chart. The first time I traded Chewy was back here on the 1st of February for a swing trade. And I took the break here I got 1-to-1. I locked in some profits, and then Chewy collapsed. Right. And then from there, I didn't really trade it anymore because I seen how rapidly it was coming down, and I decided to not be in it for now. And the volume actually started getting really light around here. But today, the first thing that I noticed was from yesterday is it took the Fibonacci from the low to the high on the weekly chart, right? And then I noticed that we had like this 786 bounce with this hammer, and we're in like this good area for buying the dip basically on the higher time frame. Okay. So we're in the 786 zone right around here. Like obviously this is a good risk to reward to be buying around here with a stop loss down here. Obviously, that's a good risk to reward. So now I'll go to the daily chart, and we had this inside bar. So the inside bar came to my attention. And with the inside bar, basically, I liked it because we actually had 4 days down and then a pause. And basically, with the pause, I am looking for the opportunity to get into the trade, right? So let me ask you guys a question. What happens to option premiums when we have a pause, when we have an inside day? What happens to the option premiums? Does it decay or does it increase? What do you guys think happens to the option premiums? So I see decay. Good, right? So I knew that the Chewy option premium decayed on Friday, and then I went here to the 5-minute chart, and I'm gonna hit the replay button here, and I'm just gonna draw the Fibonacci of the previous day. So this is actually Friday. So what I did is I took the Fibonacci from the low to the high like this. And what I'm looking for with reversal trading, sorry, the low is over here. What I'm looking for reversal trading is I'm basically just looking for, okay, if we break lower, then where can the next level of support be? And I'm not using the chart to look for the support. I'm actually using the Fibonacci extensions, because what I'm trying to anticipate is that an algorithm is going to come in, take a short somewhere, and then sell at one of these extensions. So the first order that I did actually is I put an order in the bot that basically said when we are below this 7607, so right over here, 7607, when we are below 7607, you need to buy me Chewy calls. Okay. And let me pull up my broker so we can discuss what the calls, the strike, and all that stuff. Okay. So I got in Chewy with the July 23rd, 2021, 76.5 calls, 7650. Okay, weeklies, right? So basically, my concept was this. When we're down here, I'm assuming this could be an area of support because I obviously knew we were gapping down, right? I knew we were gapping down because the market was red. So I said, okay, I know we're gapping down, but when we gap down, where can be the level where we can turn around? So I said, okay, when we are below here, anywhere below this level, just buy me calls. And I'm willing to risk about, I think I put in, let me see, I put in $161. So I was okay to lose the full $161. I didn't care because that's a small amount for my account, right? So I'm okay using it. So what happens? Okay, first candle, boom. So here's the first candle. So obviously it's opening below my my trigger. So I automatically got filled on Chewy right here. Okay, right here where the open is, that's where I got filled. So the time on the broker here is 9:30 and 22 seconds. So within 22 seconds of the open, I got filled. Just like that. Like boom. I got filled in 22 seconds. So I had my calls there. And then that was it. That's all I did. That's the only thing I did with the play. And then there was an inside bar, which I added on. Okay. But I let the trade develop itself after that. So let's see. Here we go. Forward. Here's, so here we go. So we had the first 5-minute bar. Here, so the opening range breakout is actually the first drill down play. Okay. So first 5-minute bar, opening range breakout, breaks above the high. So right there, you would be triggered long. Okay. So what's next? Okay. We continue higher. We continue higher there. Okay. And we fill a good portion of this gap right here. So you just took the calls on the break of the first 5-minute bar. That's at least 20 or 30% right there. Right. So that's a good play right there. Right. And then the next thing right here, we have an inside bar. So this inside bar was the opportunity that I took to get in and add more. And then boom, we had the breakout there. And it was like after this, it was just insane. I was not expecting that at all. Like this is a trend day on Chewy. And like I said, that's only going to happen about 20% of the time. So I loaded up down here and that was it. I just let it go. And because I'm willing to lose whatever I put in, right? I'm okay with that. That's how you have to play. Sometimes you have to play options full risk. So if we just look at the trades on the day, we had the opening range breakout, we had the inside bar. And if you missed all of that, you still have this inside bar right here. So, and then I guess even this one is the last one I wouldn't take anything after 11, right? So, I mean, it was just beautiful. And I was actually wondering, like, let's see what the price of the calls are right now. So I got in at $1.61 and the calls are $6.15. Can somebody do the math for me? $1.61 to $6.15. What is the percentage gain? Somebody do that for me. Okay, it's at least 3 times. So basically I thought actually it might have been, I thought it would have probably went up a little bit more. I thought it would have been like 4 times or 5 times potentially. But obviously what happened was because of the gap down, the premium prices were higher. Both calls and put premium price were higher because the market was more volatile. And this is the double-edged sword with options sometimes. The double-edged sword with options sometimes is this. They will price in the volatility. And if they price in the volatility, then the premium is going to be expensive. So let's do an example. Okay, let's do an example just for illustrative purposes. I took the options, but so I put $160 in the options. Okay, and get the pen and the paddle and let's write this down together. Okay, so get the pen and the paddle. Let's write this down together. Okay, so we're gonna go here. So we're gonna say options. We took July 23rd, 76.5 call, and we spent $161. Okay. So now let's look at the shares. And for the shares, let's just do the opening range breakout. So if I wanted to take the opening range breakout right here, let's just take the high, the break above the high, and then the stop loss below the low of the candle. Let's go to the risk calculator and let's put this at $161. Okay. So if we got in at $161, we would need to buy 203 shares in order for us, like if this turned around and stopped us out, then we would have basically lost the full $161. Okay. So now let's take this and actually just take it to the close, which was here. So that's 8 times. That's 8 times. Okay. So now if we use shares, we would get 161 times 8. What the hell is that? 61 times 8. 1288. Okay. 1288. And what was the profit? What was the ending price on the options were? Let me get that for you guys. $615 basically. Okay. So in this case, because the options were actually priced very expensive because of the gap down, I could have actually made more money just taking shares. Do you guys see? Because in both scenarios, I'm risking $161, right? But the main benefit of the options is that I can swing it into tomorrow, and that whatever I put in, so the $161 is my risk. That's it. It can only go back to 0. But the shares, if I swing it into tomorrow, okay, if I swing it into tomorrow and there's a huge gap down, I'm going to be trapped with the shares. All right. So let me know what you guys, what would you guys have rather done in this situation? Hit me with a 1 for options and hit me with a 2 for shares. Which one would you have rather done in this situation? Tell me what you guys think. So I see a 1, see some 1s. So I see some people want to do the options. I had a lot of people want to do the options. So even though the shares made more money in the same setup, it seems like most people would actually prefer to do the options, which is interesting. Right? That's very interesting to me, actually. But what I want to show you guys is that when the market has large gaps, either gap up or gap down, then the volatility, some of that is going to be priced into the option. Okay? So just be aware of that. So I see a lot of people are saying because of small accounts. Yeah, I understand that. I totally understand that. Yeah, that makes sense. So let me put back my risk to where it needs to be. Okay. All right. So yeah, I totally get that. Yeah, small account. Um, you wanna be able to get into the position. Also, if you don't need to use margin, right? If you're doing options, you do a cash account, you don't need margin activated, all of that. So that's obviously main benefit of options. So, for small accounts, it's very important, but you also have to always be aware that the volatility is going to be priced in to a certain extent. And you know what? Like sometimes if this thing didn't actually shoot up like this, if it actually kept going sideways, I would have gotten crushed. But again, if I did lose, I was okay with it because I knew what my risk was before I entered the trade. Okay. So what else did I say we're going to talk about? I can't talk about every single one because I took like 7 of them and we don't have the time. So let's do Upwork and Roblox. Okay. So hit me with a 3 if you guys understand the setups there on Chewy. Hit me with the 3. Okay. See the 3s. So, guys, full transparency. I'm swinging this position. And whatever happens, happens. It can gap up tomorrow, whatever. I don't really care because I did my job as a trader. I executed my trade according to my plan. And now I just have to let the market do its thing. I'm going to move my stop loss up tomorrow at the open so that I can protect something. But I'm not going to lose sleep whatever the market does. You guys, if you're losing sleep with what's happening in the market, that means either you're a very new trader or you're oversizing your position. Okay, so just be careful. So let's go to Roblox. So Roblox, I actually did the same thing with Roblox. But Roblox took some time for me to get actually working. So you could see like this was my analysis from yesterday. We had an inside day. I drew the extensions. I actually got in somewhere around here. When Roblox opened, I got filled on the calls right around here. And then we actually had another leg. I sat through all of this, right? Because like I said, I'm okay with losing the full amount that I put in. I'm okay with it. That's the risk that I take. Can you go over how you pick the contract to play? Great question. So for Chewy, I'll just give you an example. So basically my entry was right around here. Okay. So all I do there is I go to the next strike or 2 above, depending on the volume of the option. So what I'll do is I'll say, okay, I want to get in Chewy around 76 something. That's what I said before. Right. And then I'll say, okay, what's the next strike above that has good volume? Okay. So that's what I look for. So I look for the next strike above my entry, or if I'm shorting, the next strike below my entry with good volume. It must have good volume. That's my criteria. Okay. I just try to keep it simple like that. So here we go. So now this is an example of a gap fill. So this is an example. So I just bought calls down here with using the Fibonacci extension, and then that was it. I didn't do anything else on Roblox, and that was a nice one, right? But let's look at some of the technicals here. So the first play was an outside bar, right? And you could play the outside bars themselves, like I taught you guys. You can just play the bar. So that's a winner, that's a winner, that's a winner. 3 winners right here on the outside bar. You just have to be willing to cover and put your stop loss to break even when you can. Okay. But what I really wanted to show here is let's take the Fibonacci from the close, bring it down to the low of the first 5 minutes. And this is what I call the gap fill. This is the gap fill working. So we push up back into the 618 and we trade to the 0.169 extension. And it's actually crazy because this is exactly what happened with the SPY. It happened with the SPY, but the SPY was doing it in the morning leg. So let's go back to the SPY. Okay. So see, the SPY pulled to the 618 and then traded to the 0.169 in the morning leg. But then look at Roblox now. Okay. It did it in the gap fill. But it's very, very interesting to notice that how the algorithms, the personality of the algorithm and the style that they're using, right? Look at the style that the algorithm is using. It's using the 618. It's using the 618 and the 0.169. It used it on SPY. It used it on Roblox. It could be the same algorithm, right? So that's just things that you have to pay attention to. And you don't see those details unless you have the fibs. It's very, very impressive. Very, very impressive, right? So this one here, there's many ways to play it, right? I told you what I did from another trading perspective. Here's the first 5-minute bar. Here's the opening range breakout right here. That's a little bit of profit. That's pretty good. You know what? Like if you're scalping there, that's good money. Here we have the 618, shorting the 618 right here. That's a beautiful play. Taking that to the extension right there. That's great. So this is called the gap fill. That's what I was trying to talk about earlier. Then the next play we have here is this inside bar. And it depends on which direction you played. You could have gotten stopped out if you went short, but if you went long, you would have been able to stick in that play. And then the last one we have really before the 11 o'clock is the inside bar right here. And this one was a winner as long as your stop was below the low of the candle. So there we go. So like breaking it down, right? There's infinite ways to play these trades based on the systems and the setups and all that. But your job is to just take as many good trades as you can and then manage the risk accordingly, right? So hit me with a 3. Hit me with a 4 if you understand the Roblox setups and if you're good with that. Hit me with a 4. Okay, I see the 4. I see the cuatro. I'm learning Spanish. 4, 4, 4, 4, 4. Living in Florida and not knowing Spanish is hard. My Floridians know that, correct? Especially in South Florida. All right. So we're going to do one more. And then I'm going to call it because I'm actually really tired right now. So let's get this done. Upwork. So this one was beautiful. Okay, so again, so I had my previous day Fibonacci drawn right here. So this is the high, this is the low. I extended it again. And I did the same thing. I did the same thing for all the orders today. I said, okay, when it's below this, basically this 10% mark, fill me. So what it does is it fills me right away at the open because all I'm looking for is basically that gap down. I'm looking for if it opens below one of these levels are going to be support. Okay. So I took the calls again right off the bat. Within 25 seconds, I'm filled. Right. And this one is actually very beautiful because it has actually some very great trades. So the first one is the full gap fill. So here's a full gap fill right here. And you get your full gap fill. You see this? We come from the open. We come all the way. We fill the gap from the previous day. And then we have a nice little short down. But the most beautiful play actually right here is the morning leg from Fibonacci from low to high right there. Look at this. Coming into the 618, and there's a beautiful hammer. Nice, big, powerful hammer. That hammer takes you all the way up there. So that's a very, very beautiful one. And then right after that, we have the inside bar. Beautiful inside bar right there. Nice, tiny one, but that's a big banger. And then don't forget opening range breakout. Okay? So, I mean, even if you're playing the opening range breakout on some of these picks, and like, what happens here if you take the opening range breakout? What do you get here? Let's see. So just taking the breakout of the high of the opening 5-minute candle, pulling it stop at the low, just taking this into the close, let's say, right there, that's, 3 times your money, right? So that's, that's a beautiful setup there too. That's a very, very beautiful setup there too. And, you guys can do the fully automated way. I like doing automation a lot because of the hours that I'm putting into all the aspects of my life. and I really need to be automated in a lot of the things that I do now. But if not, then you have to read the price action. Okay. If you're not going to be automated, you have to read the price action at the open, and you have to determine, are you going to take an opening range breakout? Are you going to take a fib? Are you going to take an inside bar? Right. And what I recommend to you guys is that whichever one you choose, just take baby steps first. Pick something that you want to trade, whether it's a fib, whether it's an orb, whether it's an inside bar, whatever, and just stick with it and do 50 to 100 trades before you jump systems. Okay, let me ask you guys an honest question right now. How many of you guys system hop? Hit me with a 1 if you system hop. Hit me with a 2 if you take at least 50 to 100 trades with one style before you move on to the next one. Be honest. So hit me with a 1 if after 1 or 2 losing trades, you just jump to the next thing. You jump to the next Twitter guru out there. And hit me with a 2 if you honestly sit down and you do 50 to 100 trades and you really track the progress. Okay? I see a lot of 1s here, and that's fine because I used to be a 1. So what I need you to do is, this is how we're going to end today's call. This is how we're going to end today's conversation. Now listen very carefully. This is a business. This is a business, and you can't make a decision without having the data. Okay? And when you're doing a business, you're not going to close down the business with one bad day at the office or one bad day in sales. You're not. You're not going to do that. You're not going to close the doors. So why are you willing to close the door when you have 2 bad trading days? Why? You know why? Somebody tell me why. Tell me what you really feel. Why is it after you lose 2 or 3 trades, you automatically go to the next one? Tell me. Tell me in the chat. Why is this happening? Let's talk about it. Let's talk about the reality of trading. The reality of trading is, if you really stick to something and you know you have a 50 to 60% edge, you're going to make money because it's just mathematical. It's mathematical. It's a business, right? Emotions, losing money. Yep, that's exactly what emotions get to you, losing money. It hurts to admit being wrong. If someone else suggests it, then they're wrong. Oversizing, lack of confidence. This is all true. No system. This is all true. And another very important thing is that we are in a toxic industry. We're in a very toxic industry where people are willing to put each other down and people are willing to lie. We're in an industry where people are claiming that they took $1,000 to $2 million on YouTube. You guys know who they are. That's the type of industry we're in. And that industry, that toxicity in the industry, it actually seeps out into the community, right? And because it seeps out into the community, you guys feel like you're doing something wrong. Because every time, correct me if I'm wrong, every time you open up YouTube, every time you open up Twitter, you see someone saying they made $1 million overnight and they're the best and everything is great and all that. You see that. Right? And then basically you blame yourself, like, oh, I'm dumb, I'm this, I'm not following the right thing, this and that, blah, blah, blah. Right? Do you agree with me? Hit me with a 1 if you agree with me that every time you open social media or whatever, you're seeing the next get rich overnight plan, and then it makes you feel bad. Hit me with a 1 if that's the truth. So here we go. My brother here, Eric, asks, quick question, Rich. When you run the fib after finding your setup, is it always on the daily or do you do weekly, etc.? Here's some melatonin cash. Thank you, brother. So when I'm day trading, I'm looking at the morning leg and the afternoon leg, which I look for in the day on the day trading side in the 5-minute, 50-minute chart. When I'm swing trading, I'm actually pulling the fibs from the weekly. Okay? So I hope that makes sense. Right? Yeah, so, it's the truth. And what I'm trying to say here, what I'm trying to get at here is this. You need to be able to ignore everything that's happening around you, and you need to sit down and you need to trade like a business. Yesterday, I asked you guys to write down your trading plan, and very few people did. I told you to write it down and share it with me, and very few people did. Very few people told me what their targets are. When are they entering? Are they going for 1-to-1, 1.5, 2 times? Very few people did. And let me ask you a question. Let me ask you a serious question. How can you compete with the guys on Wall Street if you're not willing to write down your plan? How is that possible? How can you beat them? Those guys that are working 60, 70 hours or 80 hours a week and their whole life is the market. How are you going to beat them if you can't write down a trading plan? And then the next question is, do you guys think the big time traders, the big time big boys on Wall Street, do you think they are trading without a trading plan? Do you think those guys trading in the markets, the guys that are making all the money, do you think that they're not trading with a trading plan? And do you think that after one or two trades they give up? Do you think, okay, like let's say a hedge fund after 2-3 losing trades, oh, our strategy is shit. Let's go look for J-Lo's bottoms now. That's the one that's gonna make us money. What do you guys think? I need you guys to change your perspective. I need you to understand that this is a business. I need you to stop jumping from system to system. And I need you to stop giving up. What I need you to do is write your trading plan down. Write it down. I need to know how much you're risking per trade. What is your setup? What targets are you going for? And then I need you to execute that plan, 50 to 100 trades, and then we can make a decision. Okay? Then we can make a decision. So just trust me what I'm saying, guys. Trust me what I'm saying. So today, the homework for tonight, write down your trading plan, put a trading log, and write trade number 1, 2, 3, 4, 5, 6, all the way down to 50. And then fill that trading log out with actual trades that you take. And then come back to me with your results and let's discuss what you need to do to improve your business. Okay? There is no get rich overnight trading. There is no 100% win rate trading system. There is no take $1,000 to $2 million trading system. It doesn't exist. And that's the truth. It doesn't exist, because if it existed, there would be a lot more millionaires than losers. There wouldn't be only 5% of people winning in the market. Okay? All right. So I'm going to head out. I appreciate your time as always, friends. I think the second part of the video is actually more important than the first part. And it's my challenge to you guys. And I want to see improvement in the community, because losing money is one of the hardest things in the world, especially when you're losing the money that you work hard to save. That is the most painful thing in the world. And it can destroy relationships. It can destroy families. It can destroy health. So let's get away from that. Okay? All right. That's it for me. Please like the video. Please subscribe. I think I'm getting closer to 5,000 subs. When we get to 5,000 subs, I'm going to do something special. Okay? So let's try to get to 5,000 subs. And let's keep going. Let's keep grinding. Let's keep thinking positive. And let's get to our dreams. Okay, friends? Take care. Have a great night.